examine these two terms, annual returns and tax. Every business owner is very much concerned with, am I going to be paying tax? Am I going to be paying anything to the government yearly? How much is it going to be? How is the calculation done? These questions are very important, and a lot of business owners are truly concerned. So now let me tell you the differences between the two. So for annual returns, you make the payment to CAC. So you would only be paying annual returns if you have a registration with CAC. Tax, you are going to be paying your tax to the federal government. That's why we have Federal Inland Revenue Service or state. So in Lagos, there's this LIRS, that's the Lagos Inland Revenue Service. Number two is that annual returns is fixed. Every company is going to pay the same thing. Every business is going to pay the same thing. Unlike tax is not fixed. Tax is calculated based on your income, based on what came into your account and what left your account. So you can't ask me, okay, how much tax am I going to be paying? I don't know, because I don't know how much is in your statement of account. Okay, so before we can know your tax fee, we have to examine your statement of account for a year. Now, number three difference is that annual returns is paid yearly. So if you did registration in 2024, you are going to be filing in 2026, but you will be filing for year 2025. If you did business registration, if you did company registration, you are going to be filing in 2027. I have another video that talks about annual returns separately. So this is just to highlight difference between AR and tax. Now for tax, you either pay yearly, it depends on the tax you're paying. If it is VAT, that's value added tax, you pay monthly. If it is normal, you are doing your tax, you want tax clearance certificate, that is done on a yearly basis, okay? Then number three is for annual returns, even NGO pays, business pays, company pay. But for tax, NGOs are exempted from paying tax. But even individual persons pay tax. Unlike AR, if you did registration with CAC as an individual, you didn't even do registration, so you can't pay AR. Unlike tax, you are going to be paying your tax even if you did not register, you will still pay your tax. Then the last one here is that penalty. What happens if you fail to file your annual returns? So if you fail to file your annual returns, what's going to happen is that you will lose your registration. And that means that everything you have built upon that registration is going to be lost. So if you have opened an account, if you have bought property in that certificate's name, everything is going to be lost if you fail to file your annual returns. But for tax, you will pay penalty, which means that all the years you did not pay, you are going to pay them, and you will also pay extra, which is called fine. Also, it's a criminal offense anywhere in the country, anywhere in the world. It is a criminal offense to not pay your tax to the government. So it's a jailable offense, okay? So that's the penalty. Also, you may lose your business, and then you may lose your assets if you fail to pay your tax. So I hope this little explanation has really helped you. Okay, so thank you for watching.